Do you want to know a trading strategy that can be able to make you at least $3,000 per day? Well, this video is just for you if you're that guy. In today's video, I'm going to share my trading strategy by analyzing volatility 75 index and explaining why we were able to enter this trade with my community in the Telegram channel. If you haven't joined the Telegram channel yet, the link can be found in the description below. So make sure you join the Telegram channel so that you don't miss these calls when they are given. Guys and girls, before you start doing your analysis, I always say you should start doing your analysis on the 4-hour time frame, because on the 4-hour time frame, it is where you will get a general picture of how the market is behaving or the general outline of the market. And on the 4-hour time frame on this volatility 75 index, what we actually saw when we first opened this 4-hour chart is that this market was previously on a downtrend. If you have been observing, I've used the word previously on a downtrend. This means that this market currently right now, it is not on a downtrend. Why is that so? It is because the downtrend market always moves in series of lower lows and lower highs. And once the market fails to retest the broken structure and comes to retest to the market's lower high, this level right here, and it breaks with full body candlesticks above it, this observation or this scenario shows us that this downtrend market is over. So our downtrend market is said to be over if the previous lower high of that downtrend movement is broken by full body candlestick. Getting back to our charts, we can see that this market was moving on a downtrend movement like this. We got our lower high right here. The market broke this structure to form some kind of another lower low. The market came to retest right here to form some kind of a lower high. The market broke this structure right here to form some kind of the market's new lower low. But you can see when the market came to retest to this level, it failed, and when the market came again to retest to the market previous lower high right here, it failed again as it broke way above with full body candlestick. Now all this that was happening on the charts showed us that this market's downtrend movement is officially came to an end. Now if you were to start your analysis on the 30-minute time frame, this is what you could have been seeing. And seeing this on the lower time frame, I'm sure your mind would have said that, okay, this market is on a downtrend. Let me just keep looking for sell entries. And the moment you enter your trades, you can see what the market did. It went back up. Now these kinds of scenarios are what makes people think that trading is a scam. Like they can say, okay, the market has been moving on a downtrend, but the moment I entered this market, the market shot up. Maybe the market was just waiting for me to enter my trades. No, you're just a tiny portion out of million traders right there. Your trade alone, your $1,000 account alone is not capable of moving the market the way it wants just because you have pressed your orders. That's not how it works. Now, after knowing this, after observing this, what we did next is we said, okay, if the market is not on a downtrend, the market is not on a ranging, then the market means right now is on uptrend direction. Now we know how the market is moving on an uptrend direction. Why am I drawing these movements? It is very possible that some people may say just I'm wasting my time, but no. Knowing how the market moves makes it easier for you to know how to predict the next market step or the next market movements. So it is always very possible, very good, in order to maintain your trading discipline and avoid taking random trades. You just make sure you draw this and you label these stones that you are to only enter the market when it reaches to either this level, the first level, or the market comes and retests to this level. But you should be very careful that the market should only retest this level and go up. If the market comes and breaks below this structure, then this should be termed as the downtrend market has officially been over and you should exit that market. Now, after labeling our broken level of this market downtrend movement, that this was a level that the market broke and signified that this trend is over, what we did next is we did observe how the market is behaving. And as you can see, we did get a fake breakout right here on this level right here. And we said, okay, let's keep observing. Just keep observing patiently how this market was moving. But again, after around 8 hours, what the market did again, the market formed some kind of a doji candlestick right here. Now we know a doji candlestick is a reversal pattern. We know a doji candlestick is a reversal candlestick pattern, right? But for this market to act as a reversal, it has to occur on specific zones with a very strong trend so that it reverses, right? But when it occurs just not on those zones that I've mentioned earlier, it means that this candlestick market can act as a continuation pattern. Now we know after the market came to retest to this level and provide these fake breakouts and the formation of this candlestick pattern right here, it showed us that this market is forming a continuation pattern of our formed uptrend movement, the uptrend movement the moment the market broke the previous downtrend movement. So this made us to go to the lower time frame with a mindset that we are to look for buy opportunities. Now straightforward, I went to the 30-minute time frame, and on here I'm going to show you how we were able to get our entry with a very minimum amount of stop loss, so that we were able to open as many positions as possible. Because the lower the stop loss, the more the positions that you are able to open. Now on the 30-minute time frame, what we did is we waited until the market started to form an uptrend movement. And we know that once the market just forms an uptrend movement, we know how it moves. Higher high, higher low, higher high, the market broke this higher low, and the moment the market came to retest to this level right here, it is where we entered our buy trades with a very amount of stop loss just below this structure. Although on the trades on the screen, we can see we entered around 23.47. we were a bit wet, but we were just on point. We had our entry market executions orders instantly right here, and we had our sell, our buy limit orders around this level in case the market comes and to get as low as this level before executing and go with our bullish movement. And as you can see how on point we were, just a very simple knowledge like this, we were able to get such a strong movement. And as you can see, we were able to make $3,000. Guys and girls, if you are new to trading and you have not understood what I have just said yet, don't know to worry. I'll be uploading videos regularly, weekly, at least 3 or 2. Make sure you subscribe to this channel so that you never miss any of my tutorials, live tutorials from live trading accounts that I have just took. Guys and girls, thank you for watching, and I hope I will see you in the next video. Do not forget to join the Telegram group, whose link can be found in the description below. Bye bye.